taking action for your money. For those 62 years old or older, reverse mortgages may be an option to bring in some extra cash.
News 3 anchor Todd Carrillo spoke to financial expert Carl Carlson to find out what they are and why you need to be careful.
In the basic sense, the reason it gets its name reverse is if you have no loan, no mortgage on your home, and you want some money, you can actually set that up so that it pays you what's maybe even equal to your house payment each month. So it becomes the reverse of a normal mortgage. Instead of you paying, it pays you. You have to be over 62 years of age to get one. And they're going to go look at the value of your house, the equity amount that's in your house, and a certain percentage of that they'll loan to you either in a lump sum, or if it's about the amount of your mortgage, they'll make your mortgage payments for you, or you can get a monthly payment. So several different options.
So who does this make sense for?
So often you might find someone that is maybe getting a little older. So maybe that's getting up 65, 70 or older. And maybe they don't have a lot of investments, but they have a larger home. Maybe it's appreciated a lot. So they have a lot of equity there, but they can't spend it. So this is an opportunity, because if they were to go get a big mortgage and they ran out of money and they couldn't make the payment, that house could get foreclosed on and they could be kicked out of it. So when you get a reverse mortgage, you don't ever have to pay it, and it pays itself off when you either move out of the home or you pass away. So the person that doesn't have a lot in investments needs a little extra money, needs a little extra spending money, wants to get a little of that equity out of their home. That's the typical person that this can work for.
And then with anything in life, there are some drawbacks, I'm sure. What would be the drawbacks to a reverse mortgage?
So the biggest drawback, there's two really. Number one is that they're pretty expensive. So you don't ever really see or feel that because you're getting the money that you want, but it's accruing. So the interest rate is significantly higher on those than a typical mortgage. And that interest is adding back to the loan every month. And there's higher fees to set those up. So you end up building up a bigger mortgage on your home faster because of that. And so then
Yeah, a lot to remember there. And Carl also says the second drawback could be the mortgage on your home with a reverse mortgage may be almost what it's worth. Problematic if you wanted to leave your home to an heir.